Hello, everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino. Hopefully, we'll be on shortly. Good afternoon, Patrick. Hey, John. Hey, Daniel. We're not. We'll do 50 tomorrow. There's no 25. I like that. Is this a stock market or Six Flags? This was more exciting than a roller coaster today. Daniel loved the ride. Let's see. Good afternoon, Paul. Hey, Mike, somebody hit the like. There we go. Let me just say, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. You know what? With that, we're just going to bring on Bob right away. Why even hesitate? Why hesitate with anything? Let's just bring on Bob. There. We got a nice close-up of your shirt as you stood up. Mr. Bubble?
That's it.
Mr. Bubble shirt. Well, that is fancy.
I like that.
Wow.
Can't get these anymore.
Wow. Did you choose that specifically for the live stream?
We're in a bubble. No. Bubble, that would have been good.
So, interesting day today. Everybody's going to need your take on inflation numbers. And then real quick, before we get to that, hold on. Tomorrow we have the FOMC, so we'll get your take on FOMC interest rate and anything you think that could be interesting from the press conference. So let's just get straight to you, Bob.
Yeah, let's get to it. First of all, I thought it was interesting that the CME Fed Watch tool, it has the probability to 79.42, right? 79.42.
79.4 I have.
Yeah. November 11th, it was 80.6. I find that strange. Now, you still, obviously, the balance of that is the 75 basis point hike. It's not a 25, right? So it doesn't look like the market took that CPI as seriously. Let me rephrase market. Doesn't look like the bond market, or I should say the short-term Fed funds market, along with SOFR and everything else that goes in there, took it as seriously as the equity market did. That's my first take. I really thought when I opened up the Fed Watch tool shortly after CPI that we'd be well above 80. I thought we'd at least be around 82, 83 at this point. But I guess not. So you look at what happened to equities today. I think that was justified. I didn't think we'd see the pullback that we saw. I really didn't. But I think the move was justified. I mean, it's likely that there was a lot of people hesitant waiting for the CPI to get on board with being long for the fourth quarter. The pullback was not very convincing. I mean, it wasn't the convincing part of the move, right? I mean, if you look at something like copper, for example, copper basically hit the 200 and pulled back, right? The copper chart. Hit the 200-day moving average and then pulled back pretty significantly, but still ended up on the day. So I suspect you had a little bit more of that in the equity markets where, I haven't looked at, I'll look at it right now. I haven't looked at like an S&P futures chart, or I usually look at SPY, right, Mike? In this live stream?
We don't, but we do in the morning. We look at it every day.
Well, let's look at futures, because I just think futures are a better proxy since they trade longer. Okay, futures closed above the 200 on my chart.
Yep. Well, it's still technically not closed yet. We're still open.
Yeah, still technically not closed. But I mean, the high 41.80, and then the close is going to be down somewhere around 40.50. That's a pretty big pullback. That's not very convincing. And I'm not sure why, but I remember why. 41.50 is marked on my chart, and that's because that's what I told Coco my target was. So I guess my target's reached. I was just giving Coco a target. Um, Sorry, guys. Bad night's sleep. So from that perspective, I thought the markets would. I thought we'd really hold the rally. I really did. Now, I sent Mike a couple of charts, and I wanted to point these charts out. Now, you all remember that I have a long position for the fourth quarter in the S&P, right? So this is the rate of change, what you see reported on CPI, the headline number, okay? And there's the downtrend that it's been in. And what might strike you more so than the steepness of that downtrend is still how much higher we are than the left side of the chart. Okay, but just focus on the trend down. This is what Democratic politicians are talking about in the Biden administration. And this is what the economists who've been calling for pauses and pivots are referring to. Inflation is finally coming down. The most interesting part of the inflation numbers broken down to me was food was up. I didn't see that coming. I really didn't see that coming. I thought because the last CPI we saw that food was almost negative on the year over year basis when you include the base effects. But food went up again. So this is a part of the economy, the everyday economy that can affect asset prices down the road if it doesn't abate. But the next chart is part of why I remain with my prognosis of a really bad late first quarter, early second quarter. It's hard to see here because it's very small, but the angle, this is the consumer price index. I've repeated time and time again in these live streams that the CPI is an index. And what you guys see when you see a number is the percent rate of change. So in other words, if you go back to November of last year, the index was somewhere around 280,000. Now it's somewhere around 288,000, something like that. The increase between those two numbers was 7.1%. So that's what you're seeing when you see the CPI release, right? You look at this, and that's at that steepness there, that little trend line on the bottom is about a 26% incline up. Look at the previous however many years. Now, I've always been very fond of telling you guys, consumer prices are always rising. If you look at this, the CPI is basically always rising. And what did I bring that back to, Mike? Maybe 2008? It's hard for me to see here. 2010?
2010.
All right, 2010, which is basically the period of time when everybody said, there's really no inflation. That's on an 8% incline. Right now, we're on a 26% incline. So not only are prices still going up, despite the rate of change falling from what we've seen at its peak, they're still going up at a very rapid rate. And that combined with higher interest rates, I see very little chance that this combination is not going to affect the economy over the medium term and subsequently earnings. So this is what I wanted to point out to you guys. And, throwing out again the caveat that I think equities rally through the fourth quarter. My whole stance since the third quarter ended, you guys all know this, that I think the S&P will finish positive in the fourth quarter. But then I think the second quarter of next year is going to be not so good. I don't have a start time for you guys as to when it starts to fall. And I don't think the bear market is over. And that CPI is just another example of why. The markets were worried about a CPI that beat. You know how I know that? Rather than the markets are excited about a CPI that came in lower, rate of change, is this sell-off. The markets were just worried about a high CPI number. They aren't excited about a CPI that was lower than expected. And you know that from the sell-off we're getting right now. Does that make sense, Mike, the way I said it?
It makes sense to me.
There's two different mindsets, guys. One is, wow, we got a lower CPI. Let's buy the hell out of this. And the other one is, oh, thank God we didn't get a higher CPI. You can buy a little or you can cover the rest of your shorts, whatever it is. So That's what the sell-off is. If the market were all excited about the weaker CPI, the sell-off would have held. I'm sorry, the rally would have held. That's my take on this.
George wants to know, what do I have to do to get the CPI 3 minutes early, like what happened today?
Oh, Jim Iorio. Jimmy tweeted about that. Is that where you got that from? Jimmy tweeted about
I
that.
talked about, I mean, stuff I was like, it came out that the everything hit, like the numbers came out at 7:26 Central. Like, I mean,
Well,
the offers were all swept.
yeah.
It was very suspicious. I know they ruled. They said there's no, we don't, the numbers did not. Well, I don't trust anything with the government. So, but
I don't either.
it was just, it wasn't like somebody jumped the gun. I mean, it was literally like sweeping. It was taking everything off the table, and then it's like, all right, oh yeah, no, here's the release. It was just a very. I didn't even, did Jim tweet? I didn't see Jim's tweet on that.
Jim tweeted. He said somebody bought a ton of S&Ps before the number, but I'm sure that was just a coincidence. It was something like that.
Yeah, I mean, the trading. I mean, it was just like literally the same reaction you get once a number dropped. It was not even wait. It was just scooping up everything. So either somebody fat fingered something.
I hope those people held them, because as of right this moment, from the 8:30 Eastern time hour to now, the S&P is only up about 0.7%. So I hope they held all of them, so that their massive win turned around on them.
Yeah, you hope they
held. I think they did, but I hope they did.
Because here, I mean, here was a little blip. I mean, and I'm sure there's never any data leaks or anything. But this, I mean, this little boom, I mean, this was a huge. This 1 minute bar went from 40.51 to a high of 40.76. That wasn't just like somebody buying a 10 lot. Okay, that took some major. There was some major buying in there, and then we get the takeoff move. So I don't know. Not saying anything, because they said there was no.
You kind of are, Mike.
What?
You kind of are saying something.
I know. I really don't know, but it was just very. That was one of the more suspicious ones.
For sure, it was just weird.
That was one of the more suspicious ones. So that's all I'm saying. Having seen hundreds, if not thousands, of major data point releases in my career, that was ranking in probably the top 10 suspicious ones. AB says a pause is coming. What's your takes? I mean, the 50's done. Everybody's saying, and I'm seeing.
Hang on. AB says a pause is coming. I mean, AB, do you literally need thunder, lightning, a completely cloud-covered sky, and a couple of drops to hit your head to say it might rain? I mean, they've basically said a pause is coming now, dude. It's not groundbreaking. Love you.
Well, now there are people saying it's 50 tomorrow and then they're done.
I don't know about that.
I don't think that's going to happen.
I think it's going to be 25 in February. That's been my stance the whole time. If you guys have heard me going back to September, I've said this. Maybe even earlier than that. My whole stance was going to be 70 before the last 75. That's when I remember saying it most clearly. It was 75, 50, 25. I don't see anything that changes my view on that. I'm not patting myself on the back. I'm just saying I don't see anything changing my view on
that. Hey, John wants to know if the spiders will go to 430 by the end of the year.
I mean, I got 417. I don't know if there's enough time to go to 430. But I mean, sure. You know, I don't have that as a target, John. But I definitely, I mean, I've got 417 now as a target on the spiders. So what would that be in the ES? Somewhere around 4170, 4180.
It's not. I mean, right now we're trading
Not
what in the
exactly like that. Yeah.
spiders. We're trading 376, and the S&P is at 4055.
Yeah.
So, or sorry, we're trading. Sorry, we're trading 401, and that's at 4055.
Yeah.
So we're
Full
roughly
one.
about 40 points ahead in the S&P versus spiders. So 420 in the spiders would roughly be about 4240 in the S&P.
Yeah. Okay. I'll go with that. Chris Plummer has 386, then 417. Well, your 386 is reached, Chris. So good call on that, bud.
Uh, Bob, the last Futures Edge podcast was mind blowing. Watching it for the second time now, everyone needs to check it out.
Yeah. So first of all, if you know who Luke Grahman is, he is a very buttoned up guy. I emailed him before the podcast and said, Jim and I will be wearing T-shirts, and I will probably have a drink in my hand, and Jim might as well. He came with a sport coat and a white shirt, so he wasn't having it. And one of the first things he said was, "There's no fucking balance sheet." I mean, he was just cussing, and he was awesome. And he threw out some stuff that is dire. Honestly, it's dire. Mike, I don't know if you got a chance to watch it, but he threw out some dire stuff. Now, having said that, I spoke to Emma Moolman, who you guys would know from the podcast, and she said she disagrees with Luke a lot. And she said that she feels like his manner of deduction is very similar to there's a gray duck, so all ducks are gray. I said, okay, fair enough. How about a show with both of you? And she said, I'm fine. If he'll do it, I'll do it. So maybe sometime next year we'll get Emma Moolman and Luke Grahman to argue. That would be amazing.
Coco,
So,
really? Coco,
but
what? Bob, how's
do the
your
math,
mom?
Coco. Coco, do the math, please. You know where I'm in. I've told you a million times, little brother. You
Bob,
know
do you
where
have a
I'm in.
trailing stop?
Coco's like my kid brother that I smack a lot.
Do you have a
But
trailing
nobody can
stop?
smack him but me. Nobody can smack him but me.
That's fine. Do you have a trailing stop?
I do have a trailing stop, yeah. It's my open. It's a break-even stop.
And what was your open price?
I got to look again. Hang on. I'll pull it up for you. When it's a longer term position like this, I don't stare at it. Hold on a
What?
second. And
You don't like watch it tick to tick?
Mike, I don't live candle by candle. Hold
It's
on a
what
second.
people ask me.
So
They're like, well, where have you been in
36,
that position since? I'm like, I entered that 4 months ago. I don't look at it every day.
it was 36.40.
3640. So your stop's still at 3640.
Yeah,
So unless you're raising your stop, you're still in the position.
correct. Hey,
Uh,
let me give
Personally,
Coco the
I'd be
current
raising my
email.
stop. Personally.
I know you would. Let me give Coco the exact percentage as of right this second. Hold on. 36.40. Exact percentage is 11.4%, Coco. That's how my long is.
There we
Oh
go.
my God. Go. Honestly, dude. He said, so you still believe in the Santa rally? When did I ever say it was a Santa rally, Coco? Do you even listen? Oh my God. If I knew where you lived, I'd drive over there and I'd biff you in the back of the head like an older brother. And then I'd tell you to go clean your room.
It's
It was a fourth quarter position, Coco. That's all it was. It had nothing to do with Santa. I don't believe in Santa. All
you
right.
don't believe in Santa?
Yeah. So I'm sorry, Mike, what have you been telling everyone in this room that only Co hasn't heard? You don't change your view unless something in the chart changes. You use stops, trailing stops, if that's part of the plan for the trade. It's not about me believing in a rally or not. Now Sterling's going to get mad at Coco. I better stop.
Bob,
What else?
this last podcast was mind blowing. I ditched Netflix for PTP content.
That's awesome.
Please help me wrap my head around the key takeaways. Seems like the Fed has to pivot in the next 3 to 6 months. So this is Panvit. Yep.
Yeah. So Panvit, Luke basically was saying two things. The smaller point was the Fed has to pivot and they have to cut rates because the government can't service the debt. Period. That's the bigger takeaway or smaller takeaway. The larger takeaway is without a productivity miracle, this is all going to blow up anyway. And if there's basically nothing they could do about it unless there's a productivity miracle. I will confide in this crew here. I better not. He said this off the record. Yeah, I better not. But I have to honor things that are off the record.
You're
But he
gonna.
basically,
Oh,
like, I'll tell you on the side, and then 2 or 3 weeks from now, you could say, so this unnamed guy said this.
I can. If I heard something through a rumor mill, it could get. It's like crypto trading. If you wash it through a couple of these other exchanges and put it through a different couple of these, like the tornado stuff, you can clean it. You can clean the rumor.
Luke was so on fire. Luke was so on fire that I didn't even get a chance to ask his opinion on Bitcoin and crypto, but he did say gold, silver, crypto. But so that's not an endorsement. I don't think he necessarily believes in crypto. If I would have asked him, I'm pretty sure he would have said the tether has to blow up first because he seems like a guy that does his research. But he basically said they have to go back to quantitative easing because they can't service the debt. And eventually that won't even work because of the devaluing of the dollar and things like the gold for oil discussion that Sterling just mentioned. How some countries are already transitioning to paying for oil with gold instead of US dollars. So not only will the US be devaluing the dollar, but the world will not want the dollar as much, which devalues it by its very nature. So you could probably deduce what he thinks the eventual outcome is. And it is dire, by the way. So, but he said something off the record that I can't say. I'm sorry.
Yes. Let's see what else. What else do we have? Yeah, see. Tumble it, then change it to XMRs. That's what we'll do. See? We can wash the rumor. And we're fine. I don't condone any of that, by the way. Luke's comments about a productivity change, maybe fusion might change the scenario, and fusion was just talked about today.
Okay, so I agree with that. So Luke's productivity miracle wasn't just energy, but Daniel that's a really insightful and excellent point. That fusion advancement today, well, no scientific discovery like that is ready next week, but also no no sovereign government explosion of the size of the U.S. would happen next week either. So yeah, if this discussion, Mike, you saw the fusion thing, right? I'm sure you did. You're all about science. If that's a real thing and it can be scaled, yes, that can cause a productivity miracle. Absolutely. But Luke wasn't specifically about energy. He was talking in general. We just, right now, when you look at productivity and look at wages, we basically have more people making fewer things. And an economy can't grow like that. So there's no way to grow out of the problems that Luke talked about on the podcast. That was a question I asked him specifically. I said, in your view, can we grow out of this? He said, no, not without a productivity miracle. But Daniel, that is an insightful and well put and well taken point about that. That was the most exciting news in years when I heard that today.
You know what my favorite thing about the fusion thing was?
What's that?
It was done with a laser.
I love lasers.
Laser.
Great point, Daniel. That was great.
Oh boy. They keep asking when you're not on here, can we get Mike a mafia name?
Mike Arnold?
Yes.
He already has one. He's Spec. You guys don't know him as Spec. He's in my phone as Spec, which is short for speculator.
So I'm Mike the
So it's
Spec.
Mikey. You're Mikey Speculator.
I'm Mikey Speculate. All right, there. We'll just go with Mikey Speculate.
Always been that. He got the first mafia name, but he sort of gave it to himself, but not really. He just had a cryptic email.
Yeah. See,
Yeah.
with an
Mike
interesting
used to hide
spelling.
behind emails when that.
Which
Mike used to hide behind email names when that was possible.
Yeah, we're not going to reveal the spelling of my email because I don't need more.
Yeah.
You guys also did a great job of tying together dollar, oil, gold, interest rates, and bond markets in one discussion. Sterling's just pumping the podcast.
Well, Sterling's right, and you should watch. You can watch it on the Path Trading Partners YouTube. You don't have to download anything. Just go to PTP's YouTube. It's on there. If you have Spotify, you can watch it there. I don't really care as long as you're all subscribed to the YouTube channel already. If you're not, subscribe and watch it there. But it really was mind blowing. I put it in the tweet when we distributed it that it was a top 3 podcast or top 3 fundamental podcast of the year. It was tops to me. I just didn't want to insult the other guests.
All right,
and
so
I didn't want them to
it's
know
your top fundamental of the year.
Yeah.
What's the top technical one? Hold on. What's the top technical one?
Well, first would be the Carly Garner one, and then would be the Mike Arnold one.
See, you're fired.
No, Carly's a wonderful human being. She's not as good as you, though, Mike. I got to be honest.
Oh, I'm just playing around.
True story.
So, rumor of a 0 rate hike. I will equivocally state we're not getting a 0 rate hike tomorrow.
Yeah.
So that's it. Bob,
What else you got?
why we think we're in a recession when the data says otherwise?
I don't think Mike or I ever said we are in one. I don't, maybe we did. I don't remember it. I said I think it's 110% chance that one is coming.
Yeah, and
But
we're tipping into one.
Yeah. By the way, the data doesn't say otherwise, Coco. The only data that says otherwise is the BLS's non-farm payrolls. And the Bureau of Labor Statistics, which is the BLS, could be called the bull lick shit indicator. I don't know. I can't think of anything so quick. The BLS indicator completely contradicts the private payrolls number, the continuing claims numbers, the JOLT numbers. The only thing that says we're not in a recession is the BLS numbers. And yes, GDP was higher, but it could be lower again. If the definition of a recession is no longer 2 consecutive quarters of negative growth, then you could clearly say that one quarter of positive growth doesn't take you out of a recession if you're in one, right? I mean, it stands to reason you could say that. You look at all the ISMs, all the PMIs, they're all in contraction territory except U.S. services PMI. That's the only one that's in expansion territory. So the data actually does say we're in one, Coco. The thing you have wrong there is, well, you have 2 things wrong. That's weird with you, Coco. Number one, I don't think Mike and I ever said we're in one. I think we're getting into one. We're going into one. There's going to be one. And number 2, the data doesn't say the opposite. The data probably says we're either already in one or moving into one.
Yeah, we have. Yeah, and there could always be this time is different. There are repeatedly.
Sure.
Like, all right, the one I mentioned a couple weeks ago with the Chicago Fed Index since the 70s has never contracted to below 40 without a recession hitting. That does not mean we're in one. It means we're set up for one. The rate of increase of unemployment claims, which I was talking about until it hit that rate of increase, and that was hit months ago, said we will hit a recession. It's just the timing of it. Now, could something could Jay Powell come out tomorrow and say we're doing zero and we're cutting in February and something really strange happen? Yes. But if you look at all the reliable indicators, a recession is coming. It doesn't mean, it's when they end up voting on it and everything else, but we're going to be tipping into one. Whether you think some people think we're already in it. Some people think we'll be getting into it first or second quarter next year. It's just a matter of timing.
Yeah, I'll tell you what, there's no way Mike ever said we're in a recession because he doesn't care. I don't necessarily care either. But I'm the one who's asked the question. Mike, if you ask Mike the question, he'd go, I have no idea. Do you want to see a chart?
The only reason I'm following it is from an interesting perspective. We have to trade what is. I keep saying that. Long term, it's still in long-term bearish mode. Short term, we've hit some key levels. We had our reversal patterns. You got to trade what is. Now, if you knew we were going to be in a recession first quarter, what does that mean? How do you position yourself? I mean, you got to still trade what is.
Yep.
That's all I know, because people can say a bunch of stuff, but I mean, from a systematic standpoint, I think we'll be much lower in the first half of next year. That's from a systematic standpoint.
Yep.
Bob, getting hypothetical, if the U.S. dollar were still gold backed, would we experience these intermittent disturbances to the same extent as we do now?
Not to the same extent. We'd still have disturbances. We did have disturbances when we were gold backed, but you also wouldn't have. So let me rephrase that. Not to the extremes that we have. Okay, because a gold-backed currency not manipulated by a central bank provides for economic cycles, and those economic cycles play out. What we have had is a central bank trying to manage those cycles and soften them, and then start new, fresh upside cycles again. And from that perspective, when it gets out of control, the Fed moves all the way in one direction and all the way in another. Okay, think about have you had experiences with cars that have that automatic lane correction thing? Okay, so let's say you're driving and you're kind of tired and you start to drift in the other lane. You notice you're in the other lane, you just kind of drift back into your lane as long as there's not a car there. But now if you have those automatic lane things, you're driving, all of a sudden the car goes like that on you. That's kind of what we have now. So we would have more cyclical disruptions and they would play out and that would be it, as opposed to these sort of soft landings that end up in one massive crash. Basically what we're doing now is the plane comes down and bounces on a cloud for a while before it nosedives and blows up. So I don't know if that answered your question. We would still have disruptions, but I think the ones we have now are more dramatic because of the fiat currency.
It's so funny to me. It's just like the whole debate today was, with the terminal rate, whether it's between 4.75 and 5 or 5 and 5.25. That's the ultimate debate. Like that little extra quarter or 25 basis point difference is going to make the world of difference when you still got quantitative tightening and you still don't know how long they'll pause for. That's not going to make or break the market. But it's so funny because that was the huge debate.
Right.
We're still in the ludicrous thing that people are trading the Fed. They're not trading, to me, they're not even trading the markets. They're not trading earnings. They are trading the Fed. That's what this market has become. And they're trading what they think the Fed will do. No, is a 75 to a 1 hike out of the question? Well, it's not happening. A 75 is not happening. Not with the amount of prep that's gone into. We're laying out the framework for.
preparing the market for 50, right?
What was that?
There's been so much work to prepare the market for 50. They're not
Yeah.
going 75.
And, you have inflation coming down. There's no way. The only chance for a 75 in my mind was if inflation blew it out today, like came in some absurd numbers. But no, there's no way they're going to do anything unexpected tomorrow. What's interesting today also, the S&P's closed. Remember from the big rally on Powell Wednesday?
Yep.
We still with this rally and pullback, we've closed below the big Powell close again. It's been. I mean, that was near. The next day was a slightly higher close, but that was the green bar's highest close. Still Powell Wednesday.
Yeah.
All right. So that's where we sit. Is there anything else? Powell's not raising to 75, raising 75. Kogo, a recent study with Goldman Sachs found that smart money is betting on a soft landing. Money managers have been favoring industrial and commodity stocks that are sensitive to economic downturns.
Well, to me, Coco, bonds are smart money, and bonds are basically predicting a recession. So that's a survey by Goldman Sachs. Is that what that says? A recent study by Goldman Sachs?
Yeah.
Smart money bet on housing in 2008. Smart money bet on tech in 1999, 2000. And smart money bet on Sam Bankman-Fried and FTX. There's a lot of smart money invested in FTX. Smart money isn't correct money every time. Okay, those are just names for flows. All right, if smart money were correct, then hedge funds would always have positive returns, and they don't. That's number one. Number two, if they're betting on industrials or commodities, they're betting that the recession already happened. Because you know what leads us out of recessions? Industrials and commodities. So careful, buddy. Just be careful how you interpret things. But whatever, they may be right. I just think it's 110% probable. When you take something like a Goldman Sachs study of smart money, you're trusting Goldman Sachs doesn't have a position. Oh, wait, they trade. Okay, they do have a position. As opposed to looking at something like continuing claims, so the 2s10s yield curve spread has predicted 9 of the last 11 recessions, right? It's been right 7 of the last 9 times it predicted one. The continuing claims number rising consistently has never been wrong. So we'll see. Also, Coco, I don't care if it's a recession or not. I really don't care. What I care is if it's stagflation or not. That's what matters to me. And I've said that multiple times in here as well. So believe what you want, my little brother.
All right. See, here's the best comment of the day from Options 22. Brilliant comment, Mike. Investors are trading the Fed. See? That you win the comments. I have to give it to you, Options 22.
It's 100% accurate and 100% true. So
they are. I mean, that's what this come to. We're not even trading earnings. We're not even trading multiple expansions or contractions. We're trading literally what people think the Fed is going to do. That's what it's come down to. So this is the thing that I think the Fed has to break longer term, because the Fed is trumping what the market is. Because it's so ingrained into, hey, once the Fed cuts, we're off to the races because it's easy money. And the Fed put, they've not broken the Fed put in my mind.
Jacob is concerned that there is now a comment a day. And I'm guessing in the back of Jacob's head, he's like, I would have won that 10 times in a row last week.
See, you know what they want? I'll have to do it after Bob leaves, the falling duck. They want the falling duck. So
actually, you should have the falling duck ready. for whenever someone has the comment of the day.
Maybe he gets a falling duck. Well, we'll do the falling duck. We have to do the falling duck. What's Bob? What's the secret word of the day? I need a secret word.
Well, it's not secret if we're announcing it.
You have to announce it.
Growth.
Growth. There you go. In any context?
What are we talking about? Like Powell's secret word? I don't even understand this.
It's just a secret word. Bob, you got to get with it. Come on. Jeez.
I don't understand what's going on.
Bob, you still have a 44% downside target in mind, or is that over with from Ted?
No, from the recent highs, 44% is my target. So that's the same.
There you go. Like 3-day stubble kind of growth. There you go. No, the secret word is not Ferrari.
It should always be Ferrari. Ted's right.
No. Oh, all right. I need a break. So we got the press conference. My position is for tomorrow. The rate hikes baked in. The press conference is way more important.
Agreed.
The Powell presser.
You know, it's funny. The amount of times that I've said in the last 15 years of my career that the press conference is more important has been unbelievable.
So we have that. We have to watch for the press conference. Also, we have Bank of England and ECB on Thursday, right?
Yeah. Those two are both on Thursday.
Yes. So
yeah.
It's still an interesting week, and you'll be on the close after the close on Thursday still?
Yeah. I'll be on after the close on Thursday. If something is crazy tomorrow, wait, I got something tomorrow. I don't know if I can come on. If something is crazy and my schedule allows, I'll come on and comment on the press conference and the statement. But I feel like I have something tomorrow, but I don't know what it is.
Well, since this goes right now. This goes like 45 minutes to an hour. So if you even jumped on at any point.
Oh no, it's okay. I've got an Australian TV interview. That's not until 5:45. So
that's Australia.
Which honestly would be 30 minutes from now. So I'll tomorrow if something's crazy. If it's just normal, it's as expected. Markets don't go nuts. I won't come on. But if there's something going on, I will.
Well, it's all going to be what Powell says.
Yeah, I mean, if he says something that actually, shocks the market. I'm looking on the Discord, which I do now. There's nothing in questions for Bob. So if there's stuff there tomorrow, I'll try and make a point of coming on. But.
So if you have a question for Bob with the press conference or something else with the rate hike, put it in questions for Bob on Discord. There we go. All right, I'm going to do some charts and then wrap it up.
All right, guys. Talk to you later.
Right. Thanks. There we go, people. There we go. So, had to get the duck, Aflac. There we go. Aflac. See? You never thought you'd turn into an Aflac. Is this a double top on the spiders? Yes. We call it a potential double top because it would need to trade below 391.64 to confirm it and close on a daily basis below that level, which, interesting enough, is the 50-day exponential. So there you go. There's your potential bearish setup in the spiders. In the Qs, no, this is not a double top, but your key area I'm watching is 280.50. We break below there. Literally, my target's back to the 265 area. At least we have a gap fill. You got asked something on Tesla real quick. Tesla's selling off again. By the way, this mini double that never confirmed or triggered is off the table. We had a little harmonic cluster down here, 157 to 158. That's hit. You also have the bigger potential double is off the table. So Lots of stuff. Now, what you're referencing is we have the magic 62.5. We got to shift to the weeklies. Also, you should not ignore, it closed not on the week yet, but it closed so far. It's back below the 200. Back below the 200 week. The last time this was below the 200 week was back in the fall of 19. So I'm going to be watching where this closes this week. However, with the close below the 62.5, we could easily see. People will say that's impossible. But from a price action standpoint, we could see 62.55. My next target is the 109 to roughly 112 area. That is my next target. Will it be a straight line? No. Am I watching, especially when we have to oversold conditions with cycles at the bottom on the longer term for bounces? Yes. But I'll keep following the weekly rotation zone. If you notice, we broke down to lows. You know, we had the May lows and we broke down in October, bounced back to the rotation zone, rotated lower, came down to new lows in November, tried to eke it up to the weekly rotation zone, fell short and rotated down. So I'm always keeping an eye on that weekly rotation zone. There's your little Tesla bit. Mike, can you confirm that the hourly double on the spiders, the hourly double? You mean from way back when, or there wasn't an hourly double today? There was no hourly double today. The only double was this little 5-minute double. The only thing was the little 5-minute double. So, and that took it, I'm just going to put on the aggressive targets, to 404. Also remember, if you were doing this, you got the gap fill targets. And the key line in the sand was eventually at this 1045 bar for me. That closed below it for projecting the gap fill. We came nearly there. So that's where that was the two key things I was watching. Now in the S&P, here's the key area. And you now have that daily double I'm keying off of. Still, the major line in the sand is still this 39.12 area. The minor line in the sand I'm watching, we close back above the 200 still. So if you ignore the spike up today, which we're not going to, of course, but from a closing basis is what I'm talking about. We're still below Powell Wednesday. We're closing back above the 200, but on the retracement level from the key lows on the 7th back to today's spike high, I'm watching this 62.5. If we close below that on a daily basis, I will be targeting a return to the upward sloping channel and 50 EMA area. And then if we break this 39.12, I think it's 39.12.25 is, 39.12.50. If we break that, since we don't have a double, my targets are 38.35, 37.55, and I will use the retracements from the entire up move. And look at how these levels line up. Price action and harmonics. Pay attention. Look where that 50 is and look at the price action. Boom. Look at the next price action target, 62.5. Boom. We closed below 37.53. That would take us 35.86 probability-wise, and look at that support base right there. You have your targets, both from price action and from harmonics. You can't make this stuff up. And look where the 37.5 is. 39.25, right at this low area, and that a close below 37.5 would be a low close since CPI Thursday on the 10th. And remember, to close below 37.5 then tips it short term to that 50, and we could get then that 50-day exponential would be out of the way too on that close. This is how ties into yesterday what I'm talking about with a roadmap. Now, there'll be shorter term signals and everything else, but those are your macro levels. There's how you map it out. All right. Am I bullish on oil? On oil, I said I was watching for a bottom. We got the percent B buy yesterday, and I even listed this morning. My next target area was 76, which we bounced off of. On any continued push, you guys should know what I'm doing now. I'm watching between the 50 and the 62.5 with the rotation zone for another rollover play. Especially once we get cycles back to the top. How did I get up with the 76 level roughly? It's the breakdown zone based off the key candle body. This was a gap open key candle body reversal. So now on a shorter term basis, it's just trailing for any longs. The only thing that would make me continued watching for higher prices would be a daily close above 78.37, which would close it above the rotation zone and above the 62.5. Don't know what else to say. So there you go. Other than that, and I said we hit that second target area for the weeklies, so I'm not surprised to see the bounce now. But we're in a major support area even on the next downturn. NASDAQ, again, also still closing below Powell Wednesday. Key line in the sand for the NASDAQ is roughly about 11,768 on a closing basis to retest this low area from 7th and 8th of December. The bigger key areas, if we break below that, now let me pull off this list. So it's a little cluttered. It's a little cluttered. Let me pull off a couple levels. Oops, I'll have to put that back on. But you see here, the real major key level is now 11,412. What's that level? That's a 50% from this run up. We break below that, 11,180. Close below that, 10,716.50. And the price action key area on the daily, look at this. It lines up pretty much spot on. Key gap down, emotional candle reversal, low and the close right in front of that, and a little mini gap down candle reversal. So we have that one mapped out. Now let me put this line back. There we go. Tomorrow morning, or tomorrow I'm watching 12,081 for overnight, and the S&P for me, the key level on any rally. This is where I'll use the harmonics. 40.78, then 40.95 roughly. Dow, your key is 34.118, and then roughly about 33.450. Yeah, it was frustrating with the Russell. I mean, look where we closed after triggering the sloppy double. This price action hit the walk-away stop level and then closed way back down. That's the nature of trading. That's, sometimes your stops just get picked off, and it's part of trading. You don't adjust your strategies because a rogue day's price action picked off a stock. Don't get into that habit, or picked off a stop. not a stock. The double after stalling out is over in the DAX. I was going to see if it closed above 14,607. It did not. We'll take a look at that. The notes, I'm just watching for tomorrow is this 113.24 area as key support. Almost coming up to that 50% retracement level. Dollar index, still, this is still a potential double bottom. Okay? Still a potential double bottom. That's the only thing. It was not invalidated. And by the way, now if this does reverse, we may be getting the reversal with the daily rotation zone out of the way. The VIX, after filling the gap, coming right back down, 62.5, and finding support between the 50 and the 62. Not much to talk about there. Natty Gas still finding resistance at that 200 and closing back below it. And I'm running out of steam, guys. Euro, my key support level is 105.50 now. That I'm watching for on any pullbacks. The pound is 123. So, are there potential double bottoms on all the futures on the 1 hour basis? Well, I just take glance. Yes. Yep. If you want, you can always, I always like to look at the time frames surrounding it, but yes, there are. So you can put them on, but that's, you'd need a close above 4,068.25. Now remember, if this comes back down overnight and retests it before confirming, it's off the table. Keep that in mind. You just have to measure these out. Yep. So, there's your bullish reversal cases for a bounce back up. But that's not even from the highs today. That's not even taking it anywhere close. All right. Can we look at UAL on the hourly? I mean, this was a bearish move. But I need to put it in context. You're still within consolidation. Roughly your key area right now, your line in the sand for me would be 40.50, roughly. You get a close back below that, you can start watching probably for some of these at least this gap fill. And what else am I going to do? What else am I going to do here? Look at that, 37.5. Oh, it's so fun. 37.5, the 200 simple, and the price action target. There you go. That's the critical level. Close back below the 50. This is the first close since the breakout rally above, which was triggered on the 18th of October. This is the first close back below the 50. But your key line in the sand is going to be this area right there. And then you see the gap left behind here, and that's right in front of the 62.5. All right. So there's your roadmap. So if you start getting the close below here, 38.78, then 36.98, but the key level I'd utilize in front of that is the closing price of 37.25. This is not a double top, by the way, because of this up here. No. So you're just going to use your price action targets on the way down. So that's how you, again, combine some of the techniques. But from a long perspective, this did some pretty substantial technical damage today. Your target was literally 37. Looks like you're definitely learning. You are welcome, Michael D. So that's how you put. I hope we got some of the newer people learning the value of putting some of these things together. And how you can come up with your key levels, your targets, your stop levels just by using price action, harmonics, and some other key levels in there. With that, I have to call it a day. I need to take a break, actually. I need to step away from the monitors. I'm starting to glow. I shall talk to everybody tomorrow morning. Remember, let's just take a quick look. Earnings, there was nothing major I was watching after the close. Tomorrow morning, there's nothing, but tomorrow after the close, I am watching Adobe. And that's about it. From everything else, which we did not cover because I wanted to bring on Bob right away. For tomorrow, there's really nothing in the morning. We got some mortgage stuff, but that's so minor compared to everything going on. For oil traders, don't forget Oil Wednesday at 9:30 with all the EIA numbers. And then 1 p.m. you have your rate hike release. But the most important thing is the Fed presser, the Powell presser at 1:30. If I was going to bet on anything, I bet you he'd still be more hawkish than dovish. The market map, you can see pretty substantial Tesla leading stuff down. Amazon and Google leading the mega caps up, but the only real mega cap to go down was Tesla. Still some stocks held up better. Oil still rallying back. Also a lot of junk rally today. Comm services, real estate. Lots of junk rallying today. That's what also, when I saw what was really rallying, besides some mega cap stuff, it was chasing down comm services, which is an extremely beat up sector. It wasn't a rally based off a lot of strength. That's what the little thing we covered, the 80% for the 50 basis point, and we're still solidly back in greed mode. I'm gonna leave it at that now. So we'll have to cover Macy's we can do it tomorrow. Thank you, Veggie Shiba. You are welcome, Daniel. I hope, Veggie Shiba, you'll consider subscribing to the channel and ringing that bell so you get notified when we do the live streams. Remember, we might get Bob on again tomorrow afternoon. Definitely Thursday. I will be back at 8 a.m. tomorrow. So, again, you are welcome. Other things maybe we can look at a little bit more tomorrow. I shall talk to everyone then. Bye.